It's a bear. Finally got this one right, I think. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Got the Deerfield live cam up. Looks like a wonderful day out there. All the Bermuda chubs are smiling and the bait seems to be calm. I can't see too many predators around there, but you know, predators are always lurking, just like they are in our lives. Well, let's take a look at prices today. And I'm going to do a quick refresh here. I had a couple issues with trying to get this video out this morning. Myself, actually, just a little brain lock, not sure. Get to a video and then you say, ah, man, I don't like that one. But here we are. We're going to run through this here. Gold currently, and thank God it's friggin' Friday, too. All right, with that said, 1748.36, up $5, oddly enough, in the industrial metals, silver, platinum, and palladium. Not just industrial, but platinum and palladium probably are, but silver and investment metal as well. Down 14 cents. Oddly enough, gold and silver up today. I saw platinum down about $2 or $3, and I said, uh-oh, that's a tell. Looks like it's going to bring silver down, and lo and behold, here we are. These funny little trends that you notice sometimes, they work until they don't mostly, but let's take a look at the ranges overnight, 1741 to 1758. I noticed that metals got kind of little monkey hammered. Again, not in a big major way. You know, it's kind of the down of 1,000 cuts. Knocking it down 15 cents. It jumps back up 13 cents, knocking it down 17 cents. Kind of wavering in that area, trending down a little bit on the chart, sideways down. Again, great opportunity to buy these metals. Silver, the same thing, 22.14, 22.82. Look at that range. But this is not uncommon for silver to run in 50-cent dollar ranges. It's kind of an erratic metal sometimes. You got to have a strong stomach to swallow. To swallow it. You got to have a strong stomach to deal with silver sometimes. You know, some people don't have that. They like that more stable kind of movements. But silver is back to making its erratic movements right now. Platinum down as well. Can't help but to think that this might have something to do with industry. Maybe not. You know, we've got kind of two, different paradigms going on here. We've got, on one hand, we're being told that there's lack of product out there, and manufacturing is working as hard as they can to get product out there. On the other hand, we're being told that commodities are kind of going down because there's lack of demand in commodities because there's lack of manufacturing. So what really is the story out there? I guess it depends on where you live and what part of the world you live in, really. Again, 22.14 to 22.82. How's that for a range? And 9.72 platinum. And for you new folks out there that are new to buying gold and silver, relax. Don't worry about this. I mean, it provides a great opportunity to buy the dips. You're hearing people saying, well, we'll never see $30 silver. We'll never. Oh, here it goes. It's heading down. I mean, those are the doomsayers. I've seen them in 40 years of this business. You hear them every time you get a little down, you hear them come up and crying about it and stuff like that. And most of them are new people that are just got out of the crypto market or some other market where they expected to get rich quick. The get rich quick people are the ones that you hear doing the most whining about price of silver being down and the price of gold being down. And don't listen to them. I've been doing this a long time, and the overall picture the gold and silver market as a roller coaster ride, but not your typical roller coaster ride. Your gold and silver roller coaster is probably the best ride in the park because the rest of the park is nothing but fiat currency, fiat digital currencies, fiat paper currencies, rigged markets, manipulated markets. But gold and silver market more or less is a roller coaster to the moon. And you're going to get those dips. I mean, that's what roller coasters do. That's what roller coaster rides do. Now picture it as a roller coaster ride to the moon. Ultimately, you are going to get to the moon. The question is you've got these big, frightening dips sometimes that happen in between on that trip. But, if you look at, I know it's simplifying, but if you look at getting into precious metals as a roller coaster trip to the moon, then these downs don't really bother you too much because the ultimate destination is what? The moon. I exaggerate just a tad there, but maybe not. So, no worries about that. I look back, for example, I can look back on silver when silver was like I remember my father buying United States silver dollars for like $1.05 each and making 15 cents each on them. My dad's a coin dealer. I'm a second generation coin and precious metals, but this was back in the late 60s, I believe, and a farmer in Virginia had found a 55-gallon drums. He had been plowing his fields or plowing a new field or something, and I remember the guy was fairly young at the time. I think he was around my father's age, and he had a horse farm as well. I forget what kind of farm he had, but he was plowing through some area or mowing over some area, and he hit the top of one of these 55-gallon drums. Silver dollars spilt everywhere. I forget how many my father said he had, 2, 3, 4 drums of these. And my father ended up meeting the guy and brokering the deal. At the time, my father was paying like $1.05 for them. They were literally worth maybe $1.15 to $1.20. My father said they were corroded. They had to boil the stuff off them. So, they weren't in great shape. So, and who knows? I don't think there were any better dates in there because my father was a coin dealer. But no less, it was. I remember silver dollars being $1.05. What are they, over $20 now? I remember when silver was $1.50, $2.50 an ounce. I bought and sold, I think, silver eagles in the $4 to $6 range. A low maybe a $4.50 to $6 range. When silver eagles come out. So I remember $5 silver, $10 silver, and during $5 silver and $500 gold, there was when it would get kicked down, or when it was 700 and gold got kicked down to 5 and silver got kicked down from 10 to 8 or 9 to. You get the same people out there. Oh, it's never going to break that next level. It's never going to break that next level. But never forget the roller coaster to the moon analogy. So, and that's basically what you got. If we lived in a perfect world where we didn't have issues with economics and all this stuff, that would not be an issue. It would be an issue actually. Gold and silver wouldn't be doing so well. Especially if we were on a gold and silver standard, more than likely. But no less, we live in a fiat-driven world, and we probably, us, like a lot of other big countries, are probably at the apex of our empire and the apex of cheap living. So let's see what happens. Well, I digress, which I do all the time. So sorry about that. Let's take a look at the chart here. Kind of something I don't do very often. A friend of mine asked me if I would. And I assume most of you look at the overnight charts, and most of you are following all this stuff anyway. However, let's look at the 3-day chart on precious metals. And as you can see, what the heck is that? That is not a gold price, is it? There it is. Okay, sorry about that. Kilograms, sorry about that. 1780. And we had spiked actually higher than that at this one point right here. And for the last 3 days, we've kind of been on a downward trend. The low looks like it's been around this area where it's at right now at 1740. And there we are right there. We're at 1748 right now. Let's take a look at the overnight markets because I'm kind of curious. Overnight, let's see, that's a 6-hour, and there's the 1-day chart. I'm not familiar with this particular chart, but let's take a look at overnight. Look at that spike right there. Now, if you notice a lot of these spikes in the past, remember I've been talking about Sunday night smackdowns and Friday smackdowns and Sunday night and Monday morning smackdowns. Typically, most of them would happen in thinly traded markets. I believe Asian markets trade between 1 and 4 a.m. or something like that. However, a lot of these markets would get monkey hammered, not in the Asian markets, but in like a Globex or whatever the heck it is. That's how we know that these markets are monkey hammered. They're typically large amounts, and silver as well, gold and silver. And let's take a look at silver chart too, which is going to be just as choppy. Where did silver get hacked at? This morning, actually, in New York. So that's unusual, but it looks like the smackdown in silver happened in New York today. I'd like to find a chart that has all the different markets that are open and when they're open, and not in GMT time here. But no less, it looks like the smackdown happened here this morning when New York opened. I think New York opens around 8:20 or something like that. So shortly after that, the silver market was okay somewhat until yesterday. This is where the smackdown happened yesterday. After New York closed, I believe between New York and London, I'm not sure which market that is. If I'm correct, London opens at like 8 p.m. I could be wrong there, but and New York closes at 2 o'clock or 1:30 or something like that. The market got smacked down around 4 p.m. I think around between 3 and 5 p.m. is where that smackdown kind of occurred right here. And there you are, right in this area. And it kind of flattened out, and then when that's probably the London market's opening up. But Yeah, I got smacked down in some weird market between London and New York yesterday, and I'm not sure what market that is. I need to find a chart that shows individual markets when they're open and all that stuff. But no worries, folks. Overall, you are on a roller coaster, and it seems so more particularly lately, a roller coaster to the moon. So relax. A perfect storm for precious metals. This was on ZH. Oh, let me close that door so you don't have to listen to that either. Hold on one second. I thought putting the phone on the other side of the room would help. A perfect storm for precious metals. You can read this free on ZH. I like a lot of this stuff done by Portfolio Armor. They do some good writing out there. This is Nick. No, I don't know if that's Nick. Oh, actually, that's the person that did the photo. I'm going to read this over to you real quick. A perfect storm for gold and silver. In theory, the past week should have been the perfect storm for gold and silver bulls, as the news fed investors a buffet of systematic risk. And one steam tray was China's Lehman moment with the impending default of the Evergrande Group. And another steam tray was a game of chicken over America's impending debt limit. Nearby, investors could find steaming dishes of hyperinflation fears by UBS clients, and right next to the croissants were rumors of shortages of industrial parts. So, economy not so good. Meanwhile, the rotting apple in the fruit bowl was seemingly the never-ending COVID pandemic. And yet, despite all that, here's how the Sprott Physical Gold Trust and the Sprott Physical Silver Trust had done over the last 5 days. And as you can see, kind of down here, similar picture with more widely traded gold and silver ETFs. The SPDR Gold Trust and GLD and the iShares Trust. So, more or less the markets. This gentleman, who wrote this again? I wanted to see his name, but I don't see it up here. Sorry about that. Portfolio Armor basically thinks that this should have been the event that drove up the price of gold, or maybe some people do, and that's what they're alluding to here. However, it did not. It did not. Industrial commodities versus precious metals. This is something we've been talking about too. I think the gold didn't get hit that much. Gold is sitting in that 1750, 1800 range where it's been for a little while now. Silver seems to have taken the bigger hit. And in fact, the gold to silver ratio is still out of whack on the 30-year average, like at 77 to 1 currently or thereabouts. And the average is around 65 to 1. So, and we don't see gold moving much lower than this. So silver is just kind of riding a weird low right now. And again, great opportunity to buy the friggin' dips. But as they point out here, industrial commodities versus precious metals. A point we made in a recent post, supply side hits home, is that inflation-driven shortages in the real economy would inflate the price of industrial commodities, but not necessarily precious metals. We made a similar point in June as well, where we noted that our recent top names that include industrial commodity come on. All right, well, anyways, let's move down here. He's going to talk about how silver sucked wind. Supply side inflation versus systematic risk. Supply side inflation may explain the performance of industrial commodities versus precious metals over the last few months, but it doesn't explain the peak performance of precious metals in the face of punitive, it looks like it should be punitive, systematic risks. There seems to be two possible answers here. And investors don't really see Evergrande, and this is really the point that I think the whole article is. What's going on here? Why aren't precious metals going way up? And he brought up these two reasons. Investors don't really see Evergrande, the debt limit, the shortages, and the bubbling inflation as a systematic risk, or investors see them as systematic risk, but they don't see gold and silver as havens from them. Regarding the first possible answer, one could argue that foreign lenders' exposure to Evergrande at about $20 billion is fairly small, and I agree with that. It looks like the Chinese have the same situation we have with Lehman. Obviously, it was easy to compare the two together. However, the Chinese CCP, the Chinese Communist government, they have the same situation. Too big to fail, but I don't think too big to jail. I mean, you could see some consequences for these CEOs of Evergrande at some point. Maybe they'll just disappear, lose all their money or something, who knows. Be considered non-persons, have their statuses janked or whatever. They can walk around homeless, but no less. And that's what the CCP will probably do, because they're not going to be happy about bailing out Evergrande, but they will. And they'll take it over too as well, and that's exactly what's happening. But it looks like that the foreign bondholders, the people that the foreigners that own investments in China, are the ones that will probably get screwed. And as the gentleman points out here, $20 billion is not a lot of money. It's fairly small, and that's why we probably haven't seen the impact of that Evergrande. It was overblown for us at this point. Again, that depends on how the Chinese handle it and what other things happen during that. If China just collapses totally, I mean, that's a huge economy, man. One of the largest economies on Earth, like ours and Europe and stuff. But if they collapse, I mean, it'll have a big effect, everything across the board. But this is not the event that seems that's going to do it, apparently. And this author asks, which do you think is the correct answer, one or two? Investors don't really see Evergrande, the debt limit, the shortages, and the bubbling inflation as systematic risks, or number two, which is investors see them as systematic risk, but they don't see gold and silver as havens from them. Hey, put that in the comments section below in this video too. And this gentleman asked to do the same, and I think, well, I answered down here. Give me 1 second here. My profile. There we go. There was my answer for this article. Number one. And for the reason of FOMO, that's what I believe. I kind of took answer number one. Investors don't really see Evergrande, the debt limit, the shortages, and the bubbling inflation. That's systematic risk. That's why we haven't seen the price of gold and silver skyrocket up. It might have gone up prior to, I mean, the reason it might have shot up prior to that is because there was some fear of systematic risk, but apparently the Chinese are going to take care of it, and 20 billion is not not a lot of money in this time. So for me, the reason was FOMO, which means fear of missing out. People weren't going to jump out of their profitable equities portfolios unless they saw everyone else doing it. And corporate media, the single narrative, was basically telling everyone, calm down, it's not going to spread into other markets. That's the message they were trying to throw out there. But still try to keep it newsworthy by bringing it up, no less. Here's, and I said that right here. Corporate news is spinning that this China Evergrande event is not systematic as well. And let me ask a question. What do central banks own in their vaults? I'll give you a hint. It's not currency. It's not cryptos. Why do central banks covet gold? Why do they continue to hoard it? Well, we know what central banks hoard. They hoard gold. They don't hoard cryptos. They don't hoard. And speaking of cryptos, man, China just dropped the hammer on cryptos completely. However, I've been talking about that for a long time, but we'll get to that in a minute. Why do central banks covet gold? Why do they continue to hoard it? Because they know it's real money. It holds real value. It's made by colliding stars, not bankers or fraudsters. And even Mr. Oz behind the curtain, the Mr. Central Banker Oz, knows this. Hence, their vaults overflow with gold. And let's not forget Mr. Oz's henchmen, waiting for things to turn. JP, with their nearly 1 billion ounces of silver and 30 million ounces of gold. Gold is real money. It's not bullshit. So, and that was my response on this page to this gentleman's question. You can go to ZH and read this article as well. Pretty good article, too. A Perfect Storm for Precious Metals by Portfolio Armor. It's on ZH. You can read it for free. And let's take a look else and see what else is going on ZH real quick here. Any articles relating to precious metals, basically everything in economics and politics can overflow into metals. That's why I like to occasionally talk about politics and economics. Politics especially, they do things right there. And for example, what they did with the 2020, the closures and everything like that, it created this terrible environment we're right in. So anybody that thinks that you shouldn't talk about politics when you're talking about economics is totally clueless. And I'm really surprised that some forums actually prevent people talking about politics, because it does have an effect on economics. It does have an effect on individuals. It does have an effect on the dollars in your pocket. No less. Let's okay. Sorry about that. Didn't mean to go sidetrack again. It's something I do frequently. And nothing really too much other than that article I saw here. Oh, China declares all virtual currency transactions illegal. Now, China has been trying to crack the whip a while on cryptos, and they don't want the outflows. They want people to stay into their own, China created their own digital crypto backed by the yuan, I believe. So that's kind of what they're trying to roll out. This way, like our government that wants to do probably, and our central bankers, this way that if an individual gets out of hand, they can just take all his money away from him and shut his account down. This is why you don't want to go into a cashless society. However, China does not want that individual to be able to go and get a separate cryptocurrency that doesn't rely on China. So that's why the Chinese are going to declare all cryptocurrencies illegal, because they are going to force their yuan, their paper yuan, and their digital yuan that they're creating, where they're eventually going to do nothing but digital in China at some point. So if you speak ill of the CCP, you'll probably wake up and your account will be blank. Probably not unlike what they really would like to do here in this country too, but I digress. So I've been saying for the last year and a half, 2 years, I think crypto is an interesting market. To me, it's like a casino. It's like a game. There's nothing really behind it. There's no physical asset there. It burns up electricity. To me, it's like a digital pinball credit. You know what I mean? So encrypted pinball credit. But no less, that's just my opinion. I'm a hard asset guy, so you're going to have a hard time convincing me that something that doesn't exist is better than a hard asset. I mean, really. But no less, I'm a capitalist too, so I believe that anyone should be able to buy and sell whatever they want, as long as it harms no other people. If it harms themselves, financially, it's their own fault. But as long as it's not fraudulent and doesn't harm others, I'm cool with it. And cryptos are, a cool market. It's just like a casino. Like I'm cool with casinos too. As a capitalist, I'm cool with that, as long as you know the game you're getting into. But to be forced into digital currencies, gosh, that's even worse than being forced into paper fiat. Just my opinion. Let me get a quick sip of coffee here. Sorry. So anyway, as I've said, Chinese government, United States government, European governments all over the world, one thing they do hate, as do the people that control them, their bosses are central bankers. And central bankers all over the world, just like politicians, you know what they hate? They hate competition. And that's exactly what cryptos, they felt a threat of cryptos as being a competition against their future digital currencies. So I think the U.S. as well is going to heavily regulate the cryptocurrency market and make it unworthwhile for the gamblers that like that market to play anymore. And where will they go? Well, I don't know. Those people are always looking for get-rich-quick schemes to me. So will they get into gold and silver? Maybe, maybe not. Once they see the writing on the wall, they probably will. Well, let me move down the page here. And does anyone honestly believe that inflation is transitory anymore? Gosh, what a spin that is. All the corporate media, oh, well, it's going to get better. Things will once everything gets into gear, the prices will come down. Bullshit. We all know that's nonsense. Let me see here. What else can we get? All right, let's just move out of here. Not too much in precious metals to talk about. Man, GATA, GATA.org, has some good stuff up here. And JP Morgan agrees to pay $15.7 million to settle a spoofing lawsuit. $15.7 million to settle a class action suit by investors that accuse the largest U.S. bank of intentionally manipulating prices. Now, remember, JP had they inherited the Lehman silver position, which was a huge silver short position that Lehman owned, and JP ended up taking that over. And for years and years and years, JP was able to spin that silver short position into almost 1 billion ounces of physical, which they own right now. And how did they do that? They did it by spoofing the markets. They paid $1 billion, almost $987 million, or almost $1 billion fine. They didn't go to jail. Again, JP is too big to fail, too big to jail. So even when they do something bad, they're not going to go to jail for it. They're just going to get fined, and they don't mind, because if JP pays $1 million fine, or $1 billion fine, they've already calculated that they already made $40 billion off it, and that's fine. No one's going to jail. Same thing with this deal. JP agrees to pay $15.7 to settle spoofing lawsuit, and that was probably from them getting caught for spoofing by the regulator, who again did not jail them, just fine them. And again, insignificant fine for them, since they probably made 10 times that amount or more. But that's what they do. So this is kind of nice to see. What's nice to see about this is it'd be nice to see if some of these people went to jail. That would send a message that spoofing is not okay, and that people like this cost everyone a fortune. But what's nice to see is that it's out there now. We know it happens. Anyone that says markets aren't manipulated is full of shit. You can simply point to court fines, legal documents, legal records that are proof that these markets are manipulated and they're spoofed, and they're done by the biggest companies on earth. They're too big to fail and too big to jail ones. So here you go. Here's proof right here. If anybody says that's not bullshit, it's not manipulated, just simply point to fines. How could they argue about that? But they probably still will. No less nice to see it out there. Nice to see that it's factual. There's data. There's proof behind what we've been talking about for 30 years now. And the other thing with JP Morgan is that they no longer own that short position. They're completely out of the short. They were able to spoof everybody out of their real silver and get rid of those short contracts that there were those short sales that they were doing for years and years that they inherited from Lehman, and turn it into real silver at super cheap prices. So I mean, their crime is just multiplied here if you were to look at it as a fraudulent crime, which regulators don't. But no less, they should have all their silver taken away from them. Again, joke, just my opinion, but no less. They spoof these markets for years. Now they have this huge, they almost own $1 billion of physical silver that they've got stored in a vault. They own 30 million ounces of gold, I believe, if I'm correct. Was it 30 million ounces of gold? Yeah, 30 million ounces of gold I think JP owns as well. That's insane, folks, and they got it all by spoofing markets and doing illegal stuff and just paying fines. And we live in a bizarre world, man. That in any other circumstances, if I did that or you did that, we'd be buried under a jail somewhere, but not these people. Let's move along here. Fed changed nothing, but gold was smashed anyway. Any questions? Some good articles out here. I, again, highly recommend that you put gata.org on your bookmark bar. These are the guys that know exactly how the markets are manipulated, who manipulates, and more or less, they can explain what the casino rules are, how the casino cheats in the rules, who the players are in the casino. And if you want to be a good card player, this is stuff that you need to know. So if you want to be a good gold and silver trade, you have to have this website bookmarked on your bar and reading it once a week. They go over the basics of how they talk about confiscation. They talk about the basics of gold manipulation. Good stuff to read if you haven't read it before. And good article here. I'd recommend reading that and this one as well. The Great Game Moves On. I like reading his stuff. And lots of good articles here. Rather than me reading them to you, we'll be here another hour. My shows are getting a little bit too long. So I'm going to suggest that you folks go to gata.org and read a few of these yourself. It's free to read, too. There's no charge for this website. Gold to taper or not to taper, that's the question. Interesting article on Seeking Alpha as well. And key takeaway points was about Powell letting us know if they're going to taper or not. I'm going to just simply say one thing. We've been giving this taper bullshit for how many years now? It's just lip service, folks. They really, I don't believe they can really meaningfully change the interest rates. And even if they were to change the interest rates, they can't meaningfully make them above what the cost of living, the real rate. Even though I think those rates are, these rates or things are manipulated, the CPI and all that stuff. But no less, they're not going to raise it where you can actually make money by investing in those things. I mean, the cost of living and hyperinflation and all that stuff. So keep hanging on to your gold and silver. Don't worry about what Powell says. It's just more lip service. And even if they were to raise the rates, it's insignificant. They can't do anything significant with it. And again, that's just my opinion. A lot of good articles on Seeking Alpha. I am a subscriber, and if you're not, you can read a lot of this stuff for free. However, a cool site to subscribe to. Wall Street Silver, a lot of cool things out here. I like seeing guys. Not sure what he paid for this, but if you're buying this stuff for over $4 an ounce, it's a little bit too much, folks. I love cool products like KRs and Maple Leafs and American Eagles, but they're in that plus. They're over $4 per ounce premium, and you can buy 100-ounce bars for spot plus 3 or less. You can buy 1 ounce and 10-ounce generic rounds for anywhere from $325 to $375. And we've got a good special on. What is it? St. Helena's Angels, which is a really cool UK or British type product at spot plus $3.95. I'm kind of limited on how many I have left right now. No less, paying anything over $4 an ounce for silver, it's just too much, man. And no matter how cool it is, and you won't get it back. The problem is if you sell into a higher market, there won't be any premium on the stuff because everyone will be selling it at once. The reason premiums are high is because you have you have a lot of buyers and you don't have a lot of products. So when we start getting to the point where you get a lot of sellers and not a lot of buyers, premiums just completely disappear. So that's why I don't like to pay a big premium up front. And I even think $3 and $4 is too high, but that's just what the market demands right now. Well, lots of cool stuff on Wall Street Silver. I've been reading this site almost on a daily basis, and I love the enthusiasm out there. Not too many questions I'm going to answer today, or not questions, but I like to look on here and see if I can answer questions or make comments on things. Oh, God, that's pretty funny. Sorry about that. And, well, listen, I'm going to close this show up. I'm a bit tired. I don't want to make it too long, and it's Friday, man. Not much to talk about in precious metals today. Let's go to yesterday's video and see if I can answer a few more questions, and we will wrap it up. Yesterday I did a video on does my local coin store suck, and because I've heard comments out there, people not happy with who they're dealing with, and let's take a look at some comments out here. I'd like to thank everyone for commenting as well, and let's look down here. The difference between you and my local coin store is that you seem to love what you're doing. My local coin store does not like coin collecting. Do not. All right, Jim, you got to go somewhere else. That's all there is to it. There are guys out there like myself. There's a lot of guys like me that like what we're doing, and a lot of guys like me that are highly competitive and don't mind beating the online sellers. Like I advertise to beat APMEX, JM, and SD Bullion because I can. My expenses are lower. I can get the product just as cheap as they can, and that's. Anyways, I can be competitive. So, and I like what I do. You know what? The product I'm kind of bored with. I've seen so many silver rounds and ounces that it's hard to get me excited over silver and gold. What I love the most are my customers. I love dealing with my customers. I like knowing what they do for a living. I like talking to people. I like discussing politics, economics, gold and silver. I like civil conversations with smart people. And that's what I enjoy about my business. Silver and gold, once you've seen one silver bar, you've seen 1,000. So a little hard for me to get excited over the product, although I do like the product. But what I like most of all, again, is dealing with people. I really do. I enjoy people. Thanks for watching, Jim. Thanks. And thank all you folks for watching here. And I'm going to look for any questions here and see if I can answer anything. I'd like to thank all the names here and everybody I'm scrolling by. Again, thanks for watching, and I appreciate it. If you're new to my channels, please hit that subscribe button and the like button too. I really appreciate that. Even if you're not new to my channel, that like button kind of helps a little bit, I think. Gets me up in the algos, helps me create more business locally for myself. Thank you. Gosh, just thank you to everybody. A lot of nice words out there. I appreciate that. And oh, Joey from Seattle, good deal, dude. Joey contacted me and took my advice of swapping some 90% for some 100-ounce bars. I haven't had a chance to do the math. Hopefully, Joey, you walked out with extra silver or extra cash in your pocket with that trade. That's kind of my whole point behind it. But even if you broke even on it and you traded your 90 for a 100-ounce silver bar, I think that was a good trade. But no less, I hope you did walk out with some money. Thanks for contacting me, Joey. I hope I helped. And again, folks, I only deal locally. I don't deal, if you live in South Florida, you can come in and buy and sell gold and silver with me and trade and come and chat with me or whatever. However, if you don't live in my area, I really can't help you. And if you got questions or anything like that, put them in comments like Joey does, and I'm happy to get back to you. If it's a situation where you're going to be getting ripped off or you're not sure about a product and it involves a lot of money, call and leave me a message at the store or try to reach me at the store during working hours. But again, it's tough for me because I'm usually always dealing with customers, local customers, and trying to help them out. So again, if you don't live in my area and you got comments and you want to ask questions, try to put them in the comment section. Again, unless it's really important and involves a lot of money. Thanks again, Joey. Thanks for watching. Guido, thanks for watching as well. They charge as much as online dealers. Most of the coins are call and 2 or 3. You may have to travel out of your area a little bit. There are good dealers out there, trust me. And and if they're charging as much as online dealers, just explain to them. Listen, I want to give you the money. Try to figure a good way to sell them. They're supposed to be selling you. However, I know how small business works out there. A lot of small business people aren't the best at customer service. So if you want to pick up some cheap silver, go in there and try to sell the fact that they should sell it to you. If it doesn't, find someplace else. But there are good dealers out there. Thanks for watching, Guido. I appreciate it. Let's see. I found that buying and selling in my local coin store is precarious depending upon spot prices and market psychology. The ability to buy and sell online is huge. Yeah, that's true to some degree, but again, some of you guys live in really bad areas when it comes to coin dealers, I guess. I think that if you take a little time in state of Florida, in the other states, I know some great dealers around the states, but again, tough to say. You just got to go out there and find the right guy. Thanks for watching. Thanks for watching there, Celtic Nut. Ron says several coin shops in St. Louis. Most shops are absolutely great, but it turns out the largest shop is just a big uppity bullion barn. Forget about shopping for numismatic. Yeah, that's what you're going to find. But hey, find yourself, whether it's a small guy or a big guy, just find yourself someone that is just as competitive as the online folks, and develop a relationship with them like my customers have here, and you'll always get a great deal. You'll always get a square deal. Well, that's really about it today. I'm going to call it quits and enjoy the rest of the weekend. Hey, appreciate you watching, and if you live in my local area here in South Florida, call me anytime at 954-493-8811. Help you out with any stuff you need. Other than that, let's just call it quits. Again, I'm a little bit tired here, and I hope you have a great weekend, and let's see what happens on Monday. Hopefully there's no monkey hammering on Sunday night, but we'll see. Bye now.